Now to the banking crisis that we've been tracking. It was a busy weekend for the Swiss government. There were crisis talks and hastily negotiated deals. They saved a bank by having it sold. We're talking about Credit Suisse. It was on the brink of collapse. We told you about it last week. Credit Suisse got a bailout from the Swiss central bank. But the bailout could not save the bank. It is now being sold. And it's being bought by its rival called UBS. UBS is Switzerland's largest banking group. The deal was brokered by the Swiss government. It's being called historic.
This solution is the takeover of Credit Suisse by UBS. It is supported by the Federal Council following several meetings with the Swiss National Bank, with our regulator, the FINMA, with Credit Suisse and UBS. And the Federal Council welcomes this takeover and is supporting it by guaranteeing the framework conditions necessary for its success.
Investors too have welcomed the deal. It was the final episode in the stunning fall of Credit Suisse, the 166-year-old financial institution. Its downfall has been years in the making. It suffered a string of scandals, shake-ups in the management, and failed attempts at reform. The upheaval in the global financial market sealed the bank's fate. It exposed the vulnerabilities of Credit Suisse. Like I said, the bank was sold to its rival UBS. The market value of Credit Suisse was $8 billion on Friday, but it was sold for less than half of this value. UBS will pay just $3.3 billion for this bank. And the Swiss Reserve Bank will lend more than $100 billion, and this is being done to ensure liquidity. But why was the merger necessary? Because Switzerland was worried that the bank could go under.
The bankruptcy of a global systematically important bank would have caused irreparable economic turmoil in Switzerland and throughout the world. For this reason, Switzerland had to take the responsibilities beyond its own borders.
It is not an ideal situation, but Switzerland had to swallow the bitter pill. You see, Credit Suisse was not just a bank, it was an institution. It was part of the Swiss identity, a name synonymous with Swiss banking.
Der Bundesrat bedauert.
The Swiss government regrets the fact that CS was not in a position to master the difficulties on its own. That would have been the best solution. We regret this not least because many thousands of employees are affected.
Viele tausende Angestellte betroffen sind.
So what happens next? Job cuts are inevitable. At least 9,000 jobs at Credit Suisse could be slashed. And this could just be the beginning. Remember, UBS and Credit Suisse were competitors. Now they will work as a single entity, so some departments will become redundant. Europe is still grappling with the fallout of this. Meanwhile, in America, where the crisis began, the situation is precarious. The markets are still in panic. Some tough calls are being taken. The assets of Signature Bank, for instance, are being sold. This is one of the two banks which failed earlier this month. Signature Bank is in New York. Its deposits and loans are being sold. The buyer is a subsidiary of New York Community Bank Corp. This too is a bank headquartered in New York. Plus, there is another ticking time bomb. It's called First Republic. It's a bank in distress. Last week, 11 major banks stepped up to save First Republic. They decided to infuse $30 billion, $30 billion. But it seems the bank could not be saved. The plan may not have worked. Credit ratings agency S&P has downgraded the bank further. It now rates First Republic as B+. That basically means junk. Connect the dots and you'll see a pattern. Banks are on shaky ground. Governments and regulators have now stepped in to save them. They're failing to stem the losses and revive sentiment. The impact will be felt across the globe. The world's biggest central banks are trying to avert an explosion. They're turning on the taps and pushing more dollars into the market. 6 central banks are working in tandem. Bank of England, Bank of Japan, Bank of Canada, European Central Bank, the US Federal Reserve, which is America's central bank, and the Swiss National Bank. They issued a joint statement, and here it is on the screen. What does it say? Why are these central banks doing this? According to them, pumping more dollars will, quote-unquote, ease strains in the global funding markets. But there's no guarantee that these measures will work. Meanwhile, in the US, the blame game has begun. Who triggered this crisis, the banks or the regulator? A US lawmaker is blaming the Federal Reserve. Her name is Elizabeth Warren. She says the chairman of the US Fed failed. Now, Warren is a Democrat, and she wants an inquiry into the bank collapse.
I'm calling for an independent investigation of the Fed. We got to take a close look at this. And look, we got to say overall that we can't keep repeating this approach of weakening the regulation over the banks, then stepping in when these giant banks get into trouble.
She's right. It is an honest and rare admission. The failure of American banks exposed the missteps of American regulators. The Fed's aggressive rate cuts dried up cash in the banking system. That's one of the reasons why these banks failed. Now the losses are mounting. This story is far from over.